You probably heard a lot of news coming through the last couple of days about Iran's nuclear deal with America. One of the interesting things that you probably have noticed is that one important thing is not being mentioned in the news broadcasts. And I know they're talking about the whole Israel conflict and everything else. The interesting thing is, what nobody is talking about in the news programs that I watched is why Iran is suddenly going to make, why they're even agreeing to do this particular nuclear deal with America. Why do it now? Why not, let's say, 2 or 3 years ago? And here's what's really going on. You see, let me just actually write this down over here. You see, what really is going on here is that both Iran and the US, they know something which most people, most average people around the world do not know, which is this, that essentially the US is heading for a revolution in its oil industry. Okay? In other words, the US is heading for an oil boom. Now, I know if you're watching this video, you're probably raising your eyebrows, or maybe you're looking at me or hearing me with disbelief. And that's okay, that's perfectly reasonable. But the truth is that Iran knows that the US is heading for oil independence, and that its oil, they know that Iranian oil is no longer going to be in huge demand as everyone thinks it is. You probably heard recently that the newspapers have said the oil prices have dropped because of the Iran nuclear deal. But you look over here, well, I don't see a major drop here at all. It's just going in a range so far. And I'll explain this to you in a few moments. You see, by the way, what I'm telling you is not new, is not at all new. I spoke to an oil analyst at British Petroleum, BP, and here's what he told me, is that by the year 2017, the US will outpace Saudi Arabia, okay, in oil production. I know that sounds incredible, but it's coming. By the way, I'm not the only person who's saying this. Oh, about a few months ago, the Wall Street Journal, let me just put this out for you guys. Wall Street Journal reported back in May of this year that the US oil boom will divide OPEC. And by the way, one of the reasons why the US is heading for an oil boom is something that's being called now fracking, okay, or shale. You probably heard these words, all right? Because of the advances in the oil industry, essentially America is now able to extract oil in ways that were not available, let's say 10, 20 years ago. And in a recent article, here's what they wrote. This is from the Wall Street Journal. And it says over here, how much oil Iran produces just does not have as much importance as it did in the past, and that the US oil independence is not just a dream anymore. Okay? So that's really what's going on behind the scenes here, folks. Now let's take a look at crude oil prices. By the way, the reason I'm actually showing all of this to you is so that you get a grounded, bigger picture outlook of crude oil. So going forward, personally for me, I am bearish on crude oil. I think crude oil prices are heading lower. Don't get me wrong though. In the medium term, in the short to medium term, anything can happen. Yes, we can see prices going higher because of some conflict in the Middle East. There's no doubt about that. But long term, I am bearish on crude oil. So what I'm showing to you here is the eSignal Advanced Get Elliott Wave program. What it does is it actually plots on the charts the Elliott wave counts. Now, for those of you not familiar with Elliott waves, all that means is Elliott wave theory essentially says that markets tend to move in 5 sections or 5 waves. So you get wave 1, you got wave 2, which is a correction, and then you get wave 3, which is usually the longest of the waves or sections. Then you get wave 4, and then you get wave 5. All right. So that's what we call a 5 Elliott wave pattern. And then after this, you get the corrective A, B, C. All right. So if I just were to number these as 1, 2, 3, 4, 5, and then you get A, B, C. One thing to remember is that wave 3 tends to be the longest of the waves. Not always, but majority of the time. And also wave 3 cannot be the shortest of the waves. That's something important to also appreciate. So based on this particular Elliott wave pattern or count you see here, crude oil put a wave 1, as you can see, it says 1 over here. Wave 2, that's the corrective wave. And you can see this entire move down is wave 3. Okay. Now, actually, I should probably draw this a little better, but what it's actually telling you, I should probably do this one more time. So that's wave 3 coming to here. Now you can see that on the chart, we've got two possibilities. Either crude will continue to get lower, which means this wave 3 will continue to expand, all right? Or we could actually have a correction, a corrective pattern, a corrective move, which will make wave 4 before we head lower, all right? So the question is, which direction is crude going? Is it going to continue and make this wave 3 longer, or are we going to have a corrective bounce, which will take us up here? So let's take a look at that now. All right, let me just bring this a little forward so you can see this. Then that's going to put our wave 4, which will take us potentially to, these are the targets. First target is about 96. The next target will take us to 99 on crude, all right? However, if the signal here fires short, then that means we're potentially heading to a minimum to this wave 3 support at about $90, which is also psychological support as well. For more information about trading the markets, whether you're a beginner or advanced trader, visit my website, leadingtrader.com. Thank you.